Okay, guys. So question number 9. We have to start question 9. So, guys, we are doing Thondaimanaru paper, the recent paper, that is question 9 of grade 13. Grade 13 or Thondaimanaru paper, but it is grade 12 syllabus. Okay, so let's start. Data control account of our Ranjan business on 30th June. Okay, they say the data control of Ranjan on 30th June was 70,000. Please be careful with the dates. Okay. So now before that, let's read the requirement. They are asking what is the adjusted data list balance? Adjusted data list balance after rectifying the above errors. Okay, so first of all, understand that they are asking you the list balance after the correction. First of all, did you all understand that they are asking you the list balance, not with the mistakes? They are asking you the list balance after doing all the corrections. That means after you correct all the individual mistakes. Usually, guys, in list balance, you record individual errors, right? When there is individual mistakes, only you recording list balance. You get that? So they are telling after you correct all these individual mistakes done in the list balance, after you correct that, what is the corrected list balance? Okay, so you should first of all understand the question, because if they just ask you the list balance, they are not asking the corrected one. But if here they ask you after correcting the errors, so that means they are asking the corrected list balance. Both of them are two different questions. First of all, I hope you all understood that. Okay, so they say the total of the data list balance did not tally with the control account on the same date. So the data control account, if I just draw the data control account, they say, guys, data control account closing balance was how much? Closing balance was 70,000, but they say this balance, it did not tally with the list balance. Okay, so if it didn't tally with the list balance, so that means we have to draw adjusted data control, adjusted trade receivable control if it does not tally with the list balance. Okay, so yeah, so y'all are asking me to repeat what I told before. I think it's better I just show y'all what I'm trying to say. Wait, control accounts. Wait a minute, guys. I'll just try to show the two different things what I was speaking. Just give me 1 minute. Why isn't it coming? I don't know why isn't it coming. Okay, listen, what I was telling is there are two different things. When they just say the list balance, when they just ask you the list balance, guys, can you all hear me? Can you all hear me? What is happening? Okay. Yeah, right. I thought I lost connection. I'm sorry. Okay, so what I was telling is, guys, the difference is when they just ask you the list balance, they are asking you the list balance without correction. Okay, but if they ask you the adjusted data list balance, they are asking you after correction. Okay, they are asking you guys after correction. So that is the two different things. So usually, guys, if you draw a reconciliation statement, now you draw a reconciliation, data reconciliation, the last line you get, tell me, guys, is it after or before? After or before correction? Now, if you draw a reconciliation, you get right in the last line. Is it after correction or before correction? The list balance which is given in the last line of reconciliation statement, is it after or before correction? Okay, so guys, it is before correction. Before correcting the list balance, that is what is given in the reconciliation. Now guys, if you want to correct the list balance, we prepare something called list balance correction statement. Listen carefully. Okay, in the bank reconciliation last line, you will have list balance, right? That list balance is before correcting the list balance, before correcting individual ledgers. Okay, but if you want to find after correcting, for that you have to prepare list balance correction statement. You will take the list balance before correcting, and then you will correct it and get the after correction. I really don't know why isn't this Excel coming, because I can show you the example, because that would be much better. There's something problem today. I'll try to show you in another day. Just remind me, okay? So fine. Now let's start doing. So guys, because it's wrong, we have to unlike. Wait. Okay, it's here. So listen, what I'm trying to say, y'all, is I can remember I did a question like that, where it is before reconciliation. Balance correction statement. Okay, so here, now guys, if you take the trade receivable reconciliation statement, the answer you get here, trade receivable list balance. This is the list balance before you correct the mistakes. This is the list balance before you do any correction for the individual balance. If you want to find the correct list balance, so this is not the correct one, guys. If you want to find the correct list balance, you have to prepare something called list balance correction statement. If you want to find the correct list balance, what you can prepare is, guys, you can prepare list balance correction statement. Okay, list balance correction statement. So in list balance correction statement, you will correct the mistake. Any individual mistakes which happen, you're going to correct that. For that, guys, first of all, you will take the wrong list balance. First of all, in the first line, you will take the wrong list balance, and then, guys, you will do all the correction, and the final answer you get will be the corrected list balance. Now, do you all understand what I was trying to say? The final answer you will get is the corrected list balance. Guys, tell me, this corrected list balance you get, what should it be equal to? This corrected list balance you get, what should it be equal to? For your answer to be 100% correct, what should this be equal to? Very good. Don't just say control account. Don't just say control account. Adjust the debtor control account. Okay. The corrected list balance should be equals to adjusted trade receivable control account. Adjusted. Okay, because you know, if there are no any errors, your trade receivable, the list balance and control account should be equal. If there are no any errors, it should be equal. So after you correct the list balance, after you correct the control account, both should be equal. Both should be equal. Okay, I hope now y'all are clear. Now I hope y'all are clear now. Fine. Now we can go to the question. Okay. So guys, see, now because of that, we have to prepare adjusted trade receivable. So you record how much is that? 70,000. Record 70,000. It's a debit balance, so record in the debit side. But they say the total of the debtor list balance was not tallying with this debtor control account on the same day. the investigation revealed the following errors later. So guys, after that, you have investigated and then you have found out the following errors. Okay. So fine, let's go one by one. Just taking this, it is easy for me to explain. Okay, so now see first one. A debit note of 8,000 has been recorded in return inverse journal as 800. Guys, debit note has been recorded in return inverse journal as 800. Okay, what's the mistake here? What's the mistake here? Now see, you might get confused, guys, because it is saying debit note. Usually debit note is for what? What is this one for debit note? Yeah, it's return outwards. For return outwards only we say debit note. Guys, I think there's a mistake here. They should have told credit note, okay? Because if it is return inwards, it's going to be credit note, not debit note, okay? I think, guys, there is a mistake. We'll see. We'll just put credit note and see, guys. We'll put credit note and see because I feel that's a mistake. So if there is a return inwards, you should record as 8,000. You have recorded as 800. Have you overstated or understated your return inwards? Now, guys, in your debtor control account, you should record return inwards. Return inwards reduces your debtor, right? You have to record in the credit side 8,000. This is the correct thing to do. But you went and recorded as 800. Have you overstated or understated? You have understated your debtor control by 7,200. You have understated. Which side have you understated? Which side have you understated by 7,200? Yes, guys, don't just say understated. You should specify. You have understated the credit side by 7,200. If you have understated the credit side by 7,200, should you write to correct the mistake? Should you write in the same side or opposite side? To correct this mistake, should you write in the same side or opposite side? Very good. You have to write in the same side. Same side means credit side. So go to adjusted trade receivable control account and write it in the credit side. What will you say? You will say understated, say return inwards. Understated return inwards 7,200. Okay? You will write it in the same side. Same side means credit side. All clear with that? So we can go to the next one. No, it will not affect the list balance because there is mistake in the, guys, you don't take the journal. If the journal is wrong, okay, now we can, yeah, the list balance also becomes a problem, no? Okay, now guys, do you agree with me if I tell you, if you get the adjusted trade receivable control account final balance, if you get that, that should be equals to this. Do you agree with me? Yes or no? Do you agree with me? Yes or no? If I'll repeat the question again. If we find the adjusted trade receivable control account balance, if we find the adjusted trade receivable control account balance, that is equals to adjusted debtor list balance. True or false? True or false? What do you say? True, because just now I showed you, right? I showed you the list balance correction statement. It is equals to the list balance correction statement should be equals to the adjusted trade receivable control account balance. So if you can find this closing balance, that's more than enough. You don't even have to draw reconciliation or anything to get this answer. Do you get it? So guys, you need to know the connection. If you know the connection, accounting is very easy. That means you just have to know, okay, this means this happens means this is going to happen. Okay, now if you find this control balance, okay, this will be equals to this answer. Do you get it? So when you know that, guys, you are really going to save a lot of time than a student who doesn't know that this is equals to this. Because guys, if you don't know this, you should do the list balance correction statement and so many things which will waste a lot of time. You need to save time in part 1 because that's very important. Now go to the next one. Okay, bad debt written of 3,000 has been recorded only in the general journal. Guys, bad debt written off, you have only recorded in the general journal. Will your control account be correct or wrong? Will your control account be correct or wrong? Think. General journal, guys, from the general journal only you take it to country. From the prime entry book only you take it to control account, right? From the prime entry book only you take it to control account. You get it? The prime entry book only you take it to control account. So if you have recorded in the general journal, wouldn't you record in the control account? What are they trying to say here? They are trying to say here they haven't recorded in the individual. Do you get it? They are trying to say here you haven't recorded in the individual account, but you have already recorded in the control account, because from the prime entry book only you take it to control account. Do you get it? From the prime entry only you take it to control account. They are trying to say they only recorded in the general journal, means they are trying to say you haven't updated your individual accounts. You haven't updated it. You get it? So that's why trade receivable control account has no problem. Remember, prime entry book total, the prime entry book only you take it to control account. Okay? Yes, Afka, only the list balance will be wrong then. Now, guys, go to the next one. Cancellation of discount of 2,000 has been recorded correctly in the prime entry book, but recorded in the subsidiary ledger as 20,000. So guys, even if you do the adjusted trade receivable, you will get the answer, right? So now they say discount allowed. You have cancelled discount allowed. It was correctly recorded in the prime entry. I told you all, if the prime entry is correct, control account is correct. But in the subsidiary, they have recorded as 20. So should you adjust anything here? Should you adjust yes or no? Should you adjust anything? No, if your prime entry book is correct, control account is also correct. Remember that. Now, debtor control account has been incorrectly overstated by 2,000 in the debit side. So they say, guys, your debtor control has been overstated in the debit side. Overstated debit side means same side or opposite side? Same side or opposite side? Overstated debit side. Same side or opposite side? Opposite side. Then write it in the credit side. They overstated the debit side, so you can write it in the credit side. What you can say? Overstated debit balance. Debit side. Overstated debit, that is going to be how much? 3,000. Now get the answer. See whether you're actually having that answer here. I hope we have, because I have a doubt, because they said, first of all, debit note. We'll see if the answer is there. Is it there? No, right? That's the problem. What shall we do? Without putting this, it's there, right? No. Still not there, right? The total of the, Fatima, if the total of the journal is wrong, will it affect the list also? Total of the journal wrong? No, it won't affect. If the total is wrong, how can it affect the list? Because the total, you take it only to the control account here. You get it? The total, you take it only to the control account. What shall we do? Wait a minute. $59,800. Question number 9. What are the errors that affect both list and control? If the source document, when you record the source document, I'll tell you all what they do is, guys, as soon as they record the source document in the prime entry, they record it in the individual also. They record it in the individual. So yeah, if your source document is wrong, dear, your both will be wrong. If your source document is wrong, both is going to be wrong. You get it? So 3,000 here, understated, that is done. And then understated return inwards is there, 7,200. So 8. Yeah. So guys, let's do like this. Okay, this question, I will do the correction and I will send it to the group. Okay, I'll just do it and I'll make sure I'll send it to the group. Okay. No, even if you record the bad date, still you won't get the answer. Even if you record the bad date here, if you all are telling, okay, why don't we record bad date, guys? Even if you record bad date, you are not going to get the answer. You get it? Yeah, we will see, guys. Sometimes there can be problem with the question. I'll confirm it with you all and we'll go to the next one. If not, we are wasting time. Question 9, I'll confirm. Okay, let's go to question 12. Question 12. So guys, question 12, the information related to KPLC, the information related to KPLC are given below. So they have given, guys, this is the opening, this is the closing. Make sure when you get a question, always take the, first of all, take your pen and write the opening and closing so that, guys, you don't miss it out. Sometimes, guys, you know the answer, but still you can make a mistake because you took the opening this one and closing this one. So please be careful. Now the question, okay. So the question is, insurance to be disclosed in the income statement and cash paid for interest respectively. So they are asking what is the insurance expense and what is the cash paid for interest. Okay, so guys, in this is taught in incomplete records. Okay, this is where you will study in chapter 9, incomplete records. Okay, so where you will put all the accruals, prepayments, everything in one single ledger. Okay, you will put all the accruals, prepayments, everything in one single ledger and try to find the missing figure. Okay, so this is not only tested in one chapter, guys, it is throughout all your accounting part, it will be tested. Okay, so you need to know these two ledger account, expense and income account. Okay, if you want, just take a screenshot. So now we need only expense account because insurance is also an expense. I think interest, they are talking about expense or income. Expense. So guys, we only need expense, but if you want, just take a screenshot. You might need it later. Okay, so now, guys, what I'm going to do is I'm going to put this expense account here. Okay, and then, guys, we will find the missing figure. So now see, they have given you about insurance and interest. So you are going to draw an insurance account and interest account. Okay, so I'll put here insurance expense. Insurance expense account, and then here interest expense account. Okay, so now see what we are going to do. They say at the starting date, accrued insurance is 0. Accrued insurance is a liability. Opening accrued insurance is 0. Okay, but if you see the closing accrued insurance is 30,000. Guys, accrued is a liability. So BBF, the balance brought forward, should come in the credit side. Closing, no, it should come in the credit side. If the BBF to come in the credit side, the BCF should come in the debit side. It should come in which side, guys? Debit side. So go to your debit side and record here what you can say, 30,000. 30,000. That is the closing payable. Clear? And then after that, go to the next one. Okay, they say interest paid in advance. Is paid in advance, asset or liability? Interest paid in advance, asset or liability? What do you think? What is the other term? Interest paid in advance. Come on, guys, you all are making small mistakes. What is the other term for interest paid in advance? Very good. Prepaid interest. Interest paid in advance. The other term is prepaid interest. Prepaid interest is an asset. You have paid in advance, guys. It's an asset account. So it will come in the debit side. Opening is 52,000. Opening is 52. And the closing prepaid is how much? Closing prepaid is 40,000. 40. Okay, 40. Here it's given 40. Now let's see. Insurance paid by check during the year is 240. Guys, when you pay, what happens? Your cash is credited while your insurance account becomes debit when you pay. Insurance account becomes debit. And then they say monthly interest expense is 20,000. Okay, monthly interest is 20,000. Guys, tell me, if monthly interest is 20, what is the annual interest? What's the annual interest? 20,000. Annual is going to be, guys, 20,000 into 12. Now, first of all, yeah, that is 240,000. Annual interest is 240. Guys, first of all, we read the requirement. Now, see the requirement. What are they asking? Okay, the first one, insurance should be recorded in the income statement. They are asking for this highlighted one. Second requirement, they are asking the cash paid for interest. This is what they are asking. Okay, first of all, understand the requirement. Now see, why did I record this 240,000 in the credit side of interest expenses? Because that is the expense relevant for the current year. Expense is debited in the expense account. That is SOPL. Income statement, expenses are debited. So that means in the ledger account, it should be credited. They are debit, here credit. Clear? Now we have recorded all what is there. Now, guys, we'll find the missing figure. We'll find the missing figure. So here, both sides 270,000. So that is going to give you a expense, insurance expense of 270. Okay. Now total this side and find the difference. That is going to give you the cash paid. So the cash paid is how much? Wait. So the cash paid is 228,000. So what's the correct answer? The correct answer is 270,000, 228,000. Good job, guys. Answer is first one. Answer is first one. So for this question, you don't need this. Okay, you don't need this. You don't need this. All clear? So please remember this ledger account. Remember this ledger account. If it is a liability, opening balance comes in the credit side. Asset, opening balance comes in the debit side. If it's an expense, SOPL comes in the credit side. Because expense is debited in the SOPL, it should credit in the ledger account. When you pay cash, expense, when you pay cash, your cash is credited, your relevant expense account is debited. So simple as that. Clear? So the answer is first one. Now go to question number 12. Go to question number 12. Oh, sorry, 13. Question number 13. So now see question number 13. They're asking you purchase of raw material and the prime cost for the year ending. Prime cost. They are asking you the prime cost. Guys, we can go backwards. Okay, we can go backwards. You know the manufacturing account, right? So if you go backwards, the last is what? The last is going to be the production cost. Okay, the production cost. They have given you the production cost. They have given you the production cost. How much they say? Production cost is 500,000. So put 500,000. We have to go backwards, guys, because usually they ask the production cost, right? But in this question, they are not asking the production cost. They are actually asking what is the purchase of raw material. Okay, so you have to find direct material. Then you have to find how much is the purchase. Clear? Now we are done with this. Now see, production overhead is given. Okay, production overhead. So production overhead. Before that, what should you record? Now production overhead. So production overhead, what you should do, you add, right? So the production overhead is 30,000. And after you record production overhead, what do you record? Work in progress. Very good. You have to record the work in progress change. Work in progress change. So they say, guys, the work in progress, the work in progress. Now they say it's decreasing. What is the relationship between the stock and cost? Positive or negative? I'll repeat the question. Okay. What is the relationship between the stock, okay, and cost? What is the relationship? Positively related or negatively related? Negative or positive? Negative or positive? Okay, I'll just show you one example. Now they say the work in progress is decreasing by 20,000. Now you will answer me, okay? If some of you all gave me the wrong answer, now I want you all to correct it. Okay, now how to find? You first of all take the opening stock of work in progress. You deduct the closing stock of work in progress. This is how you find the change. Now they say you have to have a decrease by 20. So if you take, I'm just taking some values. If you take opening stock as 30,000, if it has to be decrease in work in progress by 20,000, how much should your closing stock be? How much should your closing stock be? If it is decreased by 20,000, how much should your closing stock be? 30,000. It should reduce by 20,000. How much should your closing stock? No, y'all are making mistake. Guys, opening stock is 30. If it should reduce by 20,000, what should your closing stock be? At the starting date, you're having 30 rupees. Okay. Now you're telling your friend, what happened is today in the morning I had 30 rupees. Now it has reduced by 20 rupees. How much do you have, guys? You have 10,000. You have 10,000. Some of y'all are giving me 50,000. Okay. So now see what is going to happen. Your work in progress decreased. When your work in progress decreased, what happened to cost? What happened to cost? Cost increased. When your work in progress decreased, your cost increased. So usually we say stock and the cost is always negatively related. Guys, if you remember this, it's really easy. Remember, any stock, it can be work in progress, it can be raw material, it can be finished good. All three stocks, guys, anything, guys, it can be finished good, it can be work in progress, it can be raw material. Cost and the stock is negatively related. This has negative relationship. If you didn't know this, please write it somewhere. Okay, so that means, guys, now they say work in progress is decreasing. If work in progress decreases, your cost will increase. If work in progress decrease, cost will increase. Okay, now see what does this decrease means? They are telling compared to the opening balance, the closing balance is less. It's reduced by 20,000. That's why I just put values to get the decrease. I just put values to show you that when you're closing, when your work in progress is decreasing, your cost is increasing. It's negative because here it reduced while the cost increased. Okay. Now see, guys, now let's continue. So we are done with this, and done with work in progress. Now, guys, what you go backwards, right? You go backwards. Now, what do you get here? What do you get here? What do you call this value? What do you call this value? Yes. What do you call this value? You go backwards. Think about the manufacturing account. When you go backwards, what do you call that value? Very good. You call that as prime cost. When you go backwards, guys, you call this the prime cost. The prime cost. Okay. So, guys, how much is the prime cost? If you go backwards, if it's addition, you should deduct. If it's addition, you should deduct. So that's going to give you 450,000. Your prime cost is how much? Your prime cost will be 450,000. Wait, did I do it correctly? $450, right? Wait, have they told that work in progress is measured at prime cost or something? No, right? Have they told that? Work in progress, have they told anywhere, guys, that work in progress is measured at prime cost or something? No, right? No, but I feel like when I see the answer script, I feel like they have taken it like this. We'll see what happens. Okay, so sometimes I regret taking Thondaimanaru paper to discuss, really, because there are mistakes, guys. I get so irritated when there are mistakes. Yeah, work. Why are you going backwards? Okay, why are you deducting when you're going backwards? Because now see, now it's like this. Now prime cost plus production overhead plus work in progress will give you production cost. So 450 plus 30 plus 20, you get 500. So if you go backwards, addition means you should deduct. That's max. If it is addition, when you go backwards, you should deduct. You get it? Okay, so for example, if you want, I can just show you in, I can just show you in a equation that is x plus 30 plus, if you want, guys, x plus 30 plus 20 equals 500. Find x, you will get the same answer. Okay. Yeah, so work in progress, that's why I added here. Work in progress is decreasing, so you add it here. Okay, now let's go, guys. Let's go. So the prime cost is 450,000, 450. Now they are asking purchase of raw material. How to calculate purchase of raw material? Now see, they have given raw material consume. Can someone tell me what does raw material consume means? There is another term. Raw material consume. When you call that, what does that mean? Another word for raw material consume. Very good. Direct material. No, not purchase. Raw material consume. Please know the similar terms. Raw material consume means direct material. Okay, so when they say raw material consume, they are talking about direct material. Okay, direct material and raw material consumed are similar terms. Both are similar terms. Okay, so guys, direct material and raw material consumed, they say it's 410,000. 410,000. Now, can someone tell me how do you calculate direct material? If direct material is 400,000, can someone tell me how do you calculate? How did you come up with 400,000? What should you do? First of all, you should take the raw material, okay? And then what should you do? You have to add the purchase. This is how you do, right? Opening stock of raw material plus purchase minus closing stock of raw material, you get direct material. Okay, so now here they haven't given opening and closing, but they have given the net decrease in the raw material. They have given, guys, the net decrease in the raw material, the net decrease. So that means you can easily find. Now see, I told you all stock and the cost is negatively related. If the raw material is decreasing, what happens to cost? Increase or decrease? They say raw material is decreasing. What happens to cost? Cost is increasing or decreasing? Cost is increasing, negatively related. Please don't forget that. Guys, some students still didn't understand that, but for that, I will explain once more. Listen carefully. Now, guys, when they say decrease, they are talking about the difference between opening and closing stock. Okay, they are telling compared to the opening stock, closing stock has decreased by 5,000. Compared to the opening stock, they say the closing stock has decreased by 5,000. What does that mean? Now, usually you take the opening stock of raw material. So then, how to find the change? Opening stock of raw material minus the closing stock of raw material, right? So they say, guys, the raw material, they say the raw material has decreased by 5,000. Okay, so now I'm just putting values. Okay, I'm just going to put values to get the answer as 5,000. No, to get the change by 5,000. Now, if I say the opening stock is 10,000, how much should the closing stock be if it is decreasing by 5,000? They say it's decreasing by 5,000, right? If they say it's decreasing by 5,000. So if it's decreasing by 5,000, tell me how much should the closing stock be? Opening stock is 10,000. It decreases by 5,000. So your closing stock should be 5,000. 5,000. Okay. 10,000 minus 5,000. 5,000. You get it? So that means, are you getting a negative or positive value? You're getting a positive value. That's why I said when your stock decreases, your cost increases. Now, are you clear? The student who asked me, when your raw material, when the stock decreases, your cost will increase. So that means, guys, again, here the raw material. Okay, they say the raw material decrease. No, when your raw material decreases, your cost increases. Now, guys, you have found the raw material change. The raw material change when you add the purchase during the year. When you add the purchase of raw material, you get direct material. When you add the purchase of raw material, you get direct material. Can't you find how much is the purchase? Can't you find how much is the purchase? How much is the purchase, guys? See, 410,000. If it is plus, you go you go backwards, means you should deduct. So 410,000, you deduct 5,000. So 410 minus 5, you get 405,000. 410,000 minus 5,000, you get 405,000. So your correct answer, purchase of raw material, is 405,000, while your prime cost is 450. Answer is fourth one. Answer is fourth one. Are you all clear? I just give you all 1 minute. Please write it down, whatever you need. more than anything, I want you all to write this down. If you all didn't know this, make sure you write it down, okay? Because this will save your time in the exam. Because you don't have to do like this and waste time, because you know the relationship. You don't have to do this and waste time. Just remember, cost and stock is negatively related. When I'm talking about the stock, I'm talking about the stock change, okay? Stock change. If not, you might think just the stock. No, I'm talking about the change in the stock. Okay, just write it down. I'll give you all 1 minute. There's nothing different. Both are same. Okay. Any raw, if it is raw material, work in progress, finished good, for all three, it's the same explanation I'll give, nothing different. Okay. When they say decrease or increase, they are talking about the change between opening and closing stock. So if you ask me how did I get these values, guys, I just assumed it for you all to understand. I just assumed it because you need to only find the change. Okay. They said work in progress is decreasing by 20. So if I assume the opening is 30,000, if it's decreasing by 20, closing will be 10,000. So then guys, if I calculate this, I get cost as 20,000. So that means when the work in progress is decreasing, cost is increasing. Same goes to raw material. Are you clear? So here, usually to find direct material, what you do? You take the opening stock plus purchase minus closing stock of raw material. But they haven't given opening and closing stock, but they have directly given the change. So we can directly put the change here without separately writing opening and closing. We can directly put. I hope now you all are clear. Okay? Because they will surely test at least one question in your final exam. So that's what I'm explaining again and again. Now, shall we go to the next one, guys? Let's go to question number 14. Is there anyone who is still writing, or can I go to question 14? That is partnerships. Okay. So question number 14. So let's read the requirement first. Partners' current account balances on 31st March 2021. So they are asking the current account balances of partners. If you take a partnership has two. One is current and the other one is capital. Yes, Aisha, I will send, okay? Current and capital account. So now they are asking the balance of current account. Guys, I'll tell you, if it is MCQ question in your exam, please don't waste time drawing the current and capital account, but because that is going to waste a lot of time of yours. Because guys, in MCQ, whatever accounting, you should always find ways to save your time. Okay, because guys, if you are a smart student, you will always find easy ways to get the answer. But always the answer should be correct. The method you're following, always the answer should be correct, okay? Because sometimes some methods are there, some by chance you get it correct, another time you do it's wrong. You get it, not that way I'm telling. You should find easy ways to get the answer, or maybe you should save time in a way where you do it quickly. So guys, if it's a partnership question, please don't draw the format and waste your time, okay? Unless it's a part 2 question. If it's a part 1, no one is going to check your working, right? So make sure you just do it for yourself. So for the current account, if it is credit side, if you want to credit the current account is equity, right? Equity, if you want to credit, equity increases or decreases. If you want to credit your equity increases or decreases, guys. Increases, right? Credit means equity increases. Debit means equity decreases. So don't need to draw the current or capital account. You can just write the working like this. Okay. So first of all, you will put the opening balance of current account. Okay. If there is anything increasing, you will add. If there is anything decreasing, you will deduct. Now if you see, they haven't given you the current account opening balance. They haven't given. If you see here, it's not given. But they have given total equity and they have given you the capital account balance. Guys, you can find the current account through that, because you know for a partnership, your total equity is the sum of capital plus current. It's the sum of capital plus current account. So that means, guys, if you know the capital, if you know the equity, you can easily find the current, right? You can easily find the current. So equity minus capital is current. So one by one I'll find. So that is 6,000 is the equity. I minus the capital, I get the current. Okay. Second one, that is 4,000 is the equity. I minus the capital, I get the current. Okay. Third one, that is 3,200 minus 2,000, I'll get the current. All of you are clear with the opening balance? Because they will test you like this. They won't directly give you. They will tell you to find out. Okay. So fine. Now go to the next one. They say for the year ended, these are the, okay, I feel like it's an easy question. I thought it's a difficult one. I feel it's very direct, right? So they have given interest on capital, partner salary, profit share, and loan interest. So guys, if you take a partnership, a partner contributes to the partnership in 4 ways. Actually, they have given all the 4 ways a partner can contribute to the partnership. A partner can contribute by contribution to the capital, by giving capital. So if he gives capital, he gets interest on capital. He can contribute by involving in the management. If he involves in the management, he gets a salary. If he takes risk, he gets a profit share. If he provides loan, he gets loan interest. In the current account, you will record everything payable to a partner. So all these 4 payable to the partner is recorded in the partner's current account. So guys, interest on capital to payable to the partner will increase the current account balance. So write one by one, just add it. 450, 300, 200. Okay. And then partner's salary will increase the current account because it's payable to him. So you have to increase his current account balance. Okay. And then the next one, profit share. You have to pay his profit share. Anything payable to the partner will increase your current account. So go and add it. And then guys, loan interest. You have to pay loan interest to the partner. So who is the partner who has given loan? The partner who has given loan only you have to pay interest. That is partner B. You have to pay an interest of 20. You have to pay an interest on 20. Okay, don't worry, in your exam, they will not give you an easy question like this. Okay, they will not give you an easy question like this. So I'm just telling you all because you might have expectation thinking. Because guys, this is very simple. They will usually give with adjustments. Okay, so guys, this is the closing balance. So get the closing balance. What's the answer? 14th one, 4th one, no? No. Did I do any calculation? Yeah, I know. Still, there is a mistake. Wait, was a mistake. Did I partner's salary? Did I record it wrong? Oh yeah, I recorded as 200, no? Okay, now that's correct. So answer is fourth one. Guys, partner's salary, it's not 200, it's 120. So that's a mistake I did. So just go through it. No, the partner's salary, I recorded it wrong. That's why answer is not coming. Wait, there's a question. Miss, suppose if they have not mentioned interest on capital is taken from opening or closing balance, which balance should we take? Opening. If they haven't mentioned, take from opening. Okay. If it's closing, they will mention. If it's closing, they will mention. Okay. So fine, that is done. Question 14, answer is fourth one. Answer is fourth one. Now go to the next question. Okay. So they say a company provides the following information regarding its inventory. Okay. What is the inventory on 31st March 2021 based on item by item basis? Guys, if you take standards, easiest standards are LKS 2. Okay, what else are the easiest standards which you feel like it's very easy? And if you take LKS 1, where they teach about stated capital, share issue, all those are easy ones. Okay. Yeah, if you take the difficult standards are LKS 16, those are difficult. But if it is LKS 2, guys, you can easily score marks. Okay. So LKS 2, guys, it says inventory shall be measured lower of cost than NRV. Okay, that means, guys, you will always compare the cost with NRV, and whichever is lower, that value only you will record as your inventory under current asset. When you are recording your inventory value under current asset, you will always compare the cost with NRV, whichever is lower, that value is what you are going to record under your inventory in current asset. Okay, so guys, there are three products, S, T, and R. Guys, in your exam, if they don't tell you item by item or grouping method, which method will you choose? In the exam, if they don't tell you, which method are you going to choose? If they are silent. Now here they specify, right? Very good. You have to use item by item. No, I'm not asking about FIFO or WAC. I'm asking if they ask you item by item or grouping, if they don't tell you anything, use item by item basis. Okay, don't use grouping. If it is grouping, they will always directly tell you. Okay, so guys, now go to here. How to find NRV? Expected selling price minus expected selling expenses is NRV. NRV, simple terms, is the estimated future selling price. Estimated future net selling price. How much are you going to sell this inventory in the future? That is what NRV is. So they say, guys, expected selling price is 18,000 for the first product, and they say they have to incur 4,000 to sell it. So the net selling price, the net estimated selling price is 14,000. Expected selling price is 26,000. In order to sell it in the future, they have to incur 7,000 expense. So that means, guys, to find NRV, you have to take this, deduct this, you will get NRV. Okay, so that's going to give you 19,000. Again, the last one, expected selling price is 30,000, selling expenses 5,000. Your NRV is 25,000. 25,000. So guys, now you compare this and find whichever is lower. So guys, the first product is this is lower. So this one, you item by item, guys, you should compare one by one and take it. Now product P, which is lower, cost is lower, then you have to take what? You have to take cost. Okay, product R, which is lower, again cost is lower, so take cost. Now, guys, after you find the lower column, listen carefully. After you find the lower column, your NRV column becomes useless. That means you have to ignore it. Okay, after you find the lower column, you have to ignore your NRV column. You just have to take the total cost. Just take the total cost, compare with the lower one. Okay. For this question, actually, you just have to now see. Now, which one? We now see the lower column is 52,000. Where do you record this 52,000? Can you all tell me? In the statement, financial statements, where will you record? Guys, this 52,000 you should know because you are going to do company accounts. This 52,000 will go to SOFP under current asset. Okay, 52,000 goes to SOFP under current asset. While this 58,000, where will this 58,000 go? This 58,000 goes to statement of profit or loss under cost of sales. Okay, under cost of sales. Please know the places you record. For this question, guys, whenever they ask you the value of inventory, they are asking you the current asset value. Okay, not the cost. Whenever they ask you the value of inventory, they are asking you what are you going to record in SOFP. Sometimes, guys, I have seen past papers, they don't say value of inventory. They say what is the carrying value of inventory. When they use the word carrying value, they are talking about statement of financial position. In statement of financial position only, guys, you have carrying value of PPE, carrying value of trade receivable. So when they say carrying value of inventory, they are trying to tell what is the value you record under current asset as inventory. You get it? So that's going to be 52,000. So guys, just to give you all extra knowledge, now if you're going to record, see guys, your cost is 58, but the NRV, the new NRV is 52,000. Guys, that means you will have an inventory written off, a stop loss inventory written off. So this inventory written off is how much? 6,000. So if you ask me the double entry for this, guys, inventory account debit under current asset, you're going to debit your inventory by 52,000. 52,000. It goes where? It goes to current asset. It goes to current asset. Okay. And then, guys, you will again debit your inventory written off. You will debit where? Inventory written off. Inventory written off is an expense. It's an expense. You will debit, guys, that's going to be 6,000. 6,000. It is an expense under which expense you record inventory written off? Other expense. Okay, so you will record this under other expense. And then, guys, the cost will go to your trading account under cost of sales. In your trading account, you will credit the cost 58,000. They can ask you to write the double entry in the part 1 writing part question. They can ask you the double entry. So this goes to cost of sales. You don't have to write this, guys. You don't have to write this. You just have to write this, okay? Without writing inventory written off, you can, yeah, it's fine. Okay. So now, guys, let's go to the next question. The question number 16. Question number 16. Okay, do you all need time to write it down? If you all need time, write it down quickly. If you are done, check question number 16. Which of the following can be considered as a change in accounting estimates in accordance with LKS 8? What do you think is the answer? Accounting estimate. So the first one, they say they are talking about what? First one, guys, they are talking about FIFO or weighted average cost. Okay, I'm just telling, I'll read it. First of all, you all read. Okay, so here, now guys, you should be able to find out what is a policy, and what is an estimate. Now you can easily eliminate answer 5. You can easily eliminate answer 5 because in answer 5 they directly tell you it's a policy. So that is going to be eliminated directly. Okay, because we are trying to find the estimate. They are talking about the policy. Okay, so guys, sometimes in your exam you will not be able to know what are they talking about, but guys, you don't give up. Read all the answers because there might be one answer you're 90% sure of. Then you choose that answer. Okay, if you don't know, now for example, now you don't know what are they talking about in the third one, you don't know what are they talking about in the second one, but don't give up. Just read the others. Sometimes you might find it easy when you read where the answer, you're 100% sure this is the answer, even though you don't know others. Okay, so now see the first one, they are asking you to find which is an estimate. Okay, so inventory, they say guys, you are determining to determine cost value of inventory. There are two methods you can use, that is FIFO and weighted average cost method. So guys, FIFO and weighted average, this is inventory policy. It's a policy, guys. Okay, then guys, the method, a change in the method of determining. Okay, so you are changing the method. If you see everywhere, see change in the method, change in the method. Guys, you're changing the method means you're changing the policy of the business. Whatever they were doing, you're changing in that. So that these are going to be policy. Before you determine income tax in a different way, now you're changing the policy to determine income tax. Okay, now because just you see the word income tax, no, don't come to a conclusion, okay, it's an estimate. No guys, they are telling the method of determining income tax you have changed, the method of recognizing income you have changed. So you have changed the income revenue recognition policy. You have changed the revenue recognition policy. Okay, there are different ways to recognize revenue, so you have changed it. Now, here, depreciation policy. There are different ways to calculate depreciation. Some businesses, they follow full-time depreciation. Okay, they say full depreciation in the year of purchase, 0 in the year of disposal. Some businesses, they say they allocate based on the number of months. Some businesses, they follow first year depreciation is 0, at the year of disposal it's full. There are different policies. So now they are asking which is the answer which shows an estimate. Estimates are, guys, you don't know what is going to happen in the future. You're just changing it, okay, based on the judgment. Now see the fourth one, an increase in the lifetime of building from 10 years to 13 years due to modernization. Guys, how do you know about the future? You don't know, right? You don't know because of this modernization. You're not sure that your building useful life will change. But because based on your judgment, you're making an estimate that the building lifetime increases from 10 to 13. So this is, guys, an estimation change. Okay, this is an estimation change. So that means, guys, the answer, the most suitable answer is the fourth one. Okay, because you estimates are what you don't know. You're uncertain about the future. Okay, those are estimates. Clear? So the answer is fourth one. Why not third one, guys? If they have told here income tax estimate, Then the answer is second one, but they are telling guys the method you're calculating income tax has changed. They never told, okay, the estimated income tax is changed. Do you understand? Both are different. Now they have calculated income tax differently before. Now they are changing the method. So they are talking about the policy change. They are not talking about the estimate. Estimate means guys, what now they have calculated income tax as 4,000. Okay, so now it has changed to 6,000. That is an estimate change. If that's what I told you, don't check the word income tax and come to a conclusion. It's an estimate. Do you understand? So the answer is fourth one. Okay, now go to the next question. K business purchased a motor vehicle for 800,000. Its useful life is 20 years. After depreciating this vehicle on straight line basis for 10 years, the company revalued its value is 500,000 and estimated lifetime is 6 years and its residual value is 50,000. What is the value of the 11th year depreciation? Okay, they are simply asking what is the depreciation after evaluation. They are asking what's the depreciation after evaluation. Guys, after evaluation, how to calculate annual depreciation? You will take what? You will take the revalued amount. You will take the revalued amount. And what will you divide it by? You will take the revalued amount and divide it by the, anyone? Okay, so they say revalued amount is given and they have given even the residual value. So you should deduct the residual value and divide it by the remaining useful life. Okay, so I'll write it properly. So what you can do is 17th one. So how to calculate? You take the revalued amount, and then they have given useful life, residual value, deduct it and divide by the remaining useful life. Okay. So it's not a difficult question. We'll see. Okay. So now see, what's the revalued? What's the revalued amount? Revalued amount is 500,000. The residual value is 50,000. And then the remaining useful life is 6 years. Actually, this is not a difficult question. So how much is the answer? 450. 75,000. Okay, this is a very easy question. Very easy question. They can test you more than this. They can test you a difficult question in your final exam than this. I mean, they can test you like this, guys, when there is a modernization. They can test you like this. But here it's a very simple and direct question. Guys, I'm not making you all scared, okay? I hope you all are not thinking she's always making us scared. No, guys, I'm trying to make sure you all study more before you go to the final exam, because if you all are scared now, you will study better rather than just going to the final exam, taking the paper and getting scared there. Okay, other than that, it's better to get scared now and study better so that in your final exam you were expecting a difficult paper. Always expect a difficult paper. When you expect a difficult paper, you will, even if you get a difficult paper in your final exam, you won't feel it because you knew that you will get a difficult paper. So you did a lot of difficult questions before the exam. Okay, please don't have a habit of doing easy questions just to satisfy yourself and make yourself happy that you know everything. I know some students who do that. Okay, who does that? They always do easy questions before the exam and they think it is very easy. Accounting is very easy. Guys, you should face the reality. Okay, you should face the reality. A level, nothing is easy. Everything is difficult. I'll tell you all directly. So for that, make sure You do a lot of difficult questions and go before the exam, so that your final paper is just like a normal paper for you, because you were ready for that. Your mindset was to do a difficult paper. Okay, don't have a mindset thinking that in the final exam you're going to get an angel and your paper is going to be easy. I know you all think like that, right? Don't you just ask yourself, you all think like that, right? You all think, okay, someone should come and help me in the final exam. You all dream like that, right? Or you might think, okay, I should get a help, or maybe an angel should come and help me in my final exam. Yeah, I know, because even I have thought like that. That's what I'm telling. Okay, but that will never happen, guys. Don't have those dreams. You should wake up soon when you have those dreams, because that is not going to happen. You can't copy A levels. You can't copy, because your friend will not be telling you and giving, because they have no time. Accounts is very much, your time is really important. So there is no time to help another person. Clear? So go to question 18, the last question for the day. What does it mean by 11th year of depreciation? 11th year means they are trying to talk about the next year. So after 10 years, the next year is 11th year. The 11th year only they have revalue. So they are asking the year at which they revalue. Okay. So guys, now go to question number 18. They are asking you, okay, so they are asking number of shares, stated capital, cash balance. Okay. So yeah, let's do that. I'll put here number of shares, and cash. Okay. So let's see. So guys, they say that they have given the opening balances and they are asking you to find the closing. So I'll first of all put the opening balance. Opening, they say opening share capital is 900,000. Opening cash is 100,000. I first of all record the opening balance. Okay. So then after that, you can find the number of shares. Now see how to find it. 900,000 is the share capital and each share is 30. How many shares do you have? 900,000 is the share capital. Each share price is 30 rupees. How many shares do you have? Can someone quickly calculate? 900,000 divided by 30. How many shares do you have? 30,000. You have 30,000 shares. Okay, you have 30,000 shares. So then guys, after that, let's continue. Now they say a right issue was made on 3:1 basis on 20th April 2021, each at 15 rupees, considering the number of shares held at the beginning. So considering the number of shares held at the beginning, they have made a right issue. So I'll first of all put the right issue. Okay, I say here, right issue. So they have made a right issue. So they say the right issue is for every 3 shares you have, you will get 1 right share. Every 3 shares. Always the big one is the number of shares you have. Okay. Always the big ratio, the bigger one is the number of shares you have. You get it? So they say out of, now you have 30,000 shares. Out of that, if a person has 3 shares, he will get 1/3. If a person has 3 shares, he will get 1 share. So how many he will get? 10,000. 10,000. Understood? He will get 10,000 shares. You have made a right issue of 10,000. So guys, right issue is 10,000. What's a double entry when you make a right issue? You will get cash, right? You will get cash. You're issuing at 15 rupees. So when you get cash, cash is debited while your shares increases. So share capital is credited. Cash is debited. Share capital is credited. Okay. I'll show how I got that. So you have already 30,000 shares, 1/3. 30,000. For every 3 shares you have, you will get 1 share. So 1/3. Remember, in a ratio, in a right issue, bonus issue ratio, always the bigger one will be the number of shares you have. The smaller one will be the right issue you get, the bonus issue you get. So out of, if you have 3 shares, you will get 1 share. Okay, so 10,000 into 15 per share, that is going to be 150,000. 10,000 into 15 rupees per share is how much? 150,000. Okay, so what's a double entry? Cash debit, cash debit. Okay, and then share capital credit. Cash debit, share capital credit. Yes, Aisha Salim, they are talking about 1 month period. No, that's a problem. No, correct, right? No, it should be 20. No, 2020. That's a mistake. It should be 2020. Okay, so why don't we consider cash in recording bonus issue? Because bonus capitalization of reserve or bonus issue is made free of charge. So cash is not involved. But right issue is made at the value less than the market value. It's not given free of charge. Right issue is given where it is less than your market value at a less price. That is the benefit of right issue. Okay. So that's given for, both are given only for existing shareholders. So guys, what's a double entry? Share capital credit, cash debit. Cash is debited, share capital is credited. Now go to the next one. Cash was received properly and then it was accepted. So I thought they will also give a bonus issue, guys. If they want to make a bit complicated, they will include a capitalization of reserve. If you see the past papers, they might include it. They have included it actually. They will issue a right issue, then they will make a capitalization of reserves also. You get it? But here they are not actually testing that. So I don't think it's a difficult one. Let's see what's the answer. $40,000 and 1,050,000. Okay, answer is there. Let's go to the last one. 250. What's the correct answer? Third one. Yeah, third one, right? Third one. So guys, we are done for the day. If you all are clear, you can leave. Okay, just make sure you complete the balance questions. Okay, we will continue every Fridays. Guys, we'll continue every Fridays. Listen. I might not be able to keep 7 o'clock because the thing is we have 2 Zoom links. Okay, so if it is occupied, it's difficult. So today one class was cancelled. That's what I could keep at 7 o'clock. Hereafter, I won't keep Tuesdays, guys, because Tuesdays, all 2 links are occupied. So I might keep Fridays 8:30 to 10 o'clock. 8:30 to 10 o'clock every Fridays, I might keep this free session. Okay, so I will be continuing with this question. So from next class, it will be from question 19. Clear? So we stop it here. That's it for today. Take care. No, not morning. You all are shocked, right? I know my students are shocked because I never keep classes at night. When I said 8:30 to 10 o'clock, they are really shocked. Okay, yes, 8:30 to 10 o'clock because I have no other time. I don't know when to keep. I don't know whether I will be awake. We'll see. Okay, so take care. Sadivel, bye-bye.